What's just as important as knowing what direction to trade the market? It's knowing when to trade the market. Understanding this will also help explain why your strategies seem to work well sometimes but completely fail other times. In this video, we're going to talk about what indicators you can use and how to apply them to improve your success and take your strategies to the next level. If you've spent any amount of time looking at charts, you'll notice they all have something in common. Their behavior isn't the same all the time. Sometimes it's trending, other times it's ranging or becoming more stationary. Trading would be much easier if the market stayed the same all the time. If it was trending at all times, we could simply adopt a trend-following strategy and follow the trend. If the market never trended and only stayed within a range, we could just trade the highs and lows of that range. But obviously, it's not that easy. The market is a mix of both, exhibiting different behaviors at different times and to different degrees. That doesn't mean we can't use strategies that rely on mean reversion or trend following. We just have to know when to use them. A strategy that is counting on a reversion to the mean is not going to work if the market is trending and thus never reverting to the mean. In fact, you would take the wrong trade almost every time. So how can we counteract this? Well, there's some indicators we can use to help us. Let's start with the Chopiness Index. The Chopiness Index is meant to give the degree to which the market is ranging sideways or trending. If the market is ranging up and down within the length window, the indicator will show a high value, indicating a high level of choppiness within the market. When the market begins to trend, the value drops, telling us the market is no longer moving sideways. But we shouldn't just look at the current value the indicator is sitting at. It's important to pay attention to whether it's been consistently decreasing or increasing. You should pay attention to the trend within the indicator. If it has created a peak and is steadily falling, price is becoming less choppy and starting to trend. A declining choppiness index value indicates increasing directional movement within the market. Peaks on the choppiness index can show us when a trend could break out soon. If the line is regularly oscillating between highs and lows making peaks, then we know the price is also oscillating between trending and moving sideways. So, we can try to predict when a trend is about to break out when we're at a peak in the indicator, meaning the choppiness has reached a high. This might seem counterintuitive to take a trend trade when choppiness is at an all-time high, but if we've seen the market oscillate between trending and not trending, then what is the next phase that is likely to happen at this point? In the right conditions, the answer is a trend. We can also reverse this concept to get out of a trend trade. If the choppiness index is hitting a low, the trend might be at its most powerful, but it also has exhausted a lot of momentum and sideways movement could occur soon. This is where we would get out of the trade, rather than getting trapped in a sideways market. But what length should we use for the choppiness index? That depends on if you want to see if the price is choppy within a longer or shorter time period. Increasing the length will give us a better idea of how choppy the price is over a longer period of time. Decreasing the length will make the indicator react quicker but show us the more recent behavior. But this next indicator we're going to talk about doesn't even give us the option to input a length, but more on that later. This is the chop zone. You'll notice it looks a bit different than your traditional indicator. Instead of a line, we have columns of different colors indicating different behavior. This indicator is actually directional, meaning it shows us bullish or bearish trends unlike the choppiness index, which does not. But more importantly, as the name would suggest, it shows us zones of choppiness. The two primary colors of the indicator are red and blue. Blue indicates a strong upwards trend and red indicates a strong downwards trend. Everything in between shows us choppiness to varying degrees. Colors closer to red mean we have choppiness leaning towards bearish momentum, while colors closer to blue mean we have choppiness leaning towards bullish momentum. You'll often see similar colors appear together when the trend is weakening or the market is becoming choppy. These could also indicate turning points in the price or just a period of consolidation. I said before that we don't have an option to input a length for this indicator, and that is true for the one in the indicator library. But I've made a few changes to make it a little more usable and versatile. I'll show you how you can add it to your own chart soon. Starting off, I tweaked the colors slightly to make it more readable. Blue still indicates a strong uptrend and red still indicates a strong downtrend. The variants of red and orange indicate choppiness leaning towards downwards momentum, while the variants of green indicate choppiness leaning towards upwards momentum, and gray sits somewhere in between the both of them. Many times in trends, you'll start to see the market become slightly choppy, but not completely turn over to the other colors. For example, you might see a large block of red indicating a strong downtrend, with some orange in the middle showing disruption. This doesn't necessarily mean the move is over. It could just be a short period of consolidation before continuing. The same goes for uptrends with blue and green. In an uptrend, green can start appearing within the block of blue, but the trend can still continue through it. An obvious sign of a very choppy market is when we see a large combination of colors continually alternating between each other like we see here. There's no solid blocks of color or trend evident. During these phases, momentum or trend indicators will give many false signals. There's not enough momentum to continue in any direction, so price will tend to revert to the mean. But that doesn't mean you can't trade this type of behavior. Many indicators are designed for ranging markets. For example, the RSI will work better in a sideways market, as long as there's at least enough momentum to oscillate between the overbought and oversold sections. Other indicators, like most types of moving averages, will not work as well in a choppy market. They will struggle to filter out noise or be reactive enough to capture swings up and down. So depending on your strategy, you should decide when the optimal time is. But back to the length of the chop zone. I added an input in my version that lets you control the period value of the indicator. You can use it on the default settings just like the regular one, but I think it's good to have the option to change it as well. The regular one is fixed to a low period value, and increasing it makes the indicator more usable for getting a bigger picture of the market. As you can see, when I set the period to 300, we're able to tell if large sections of the price is trending or choppy. I found this indicator to be more useful after increasing the period, which is not possible on the regular indicator. In addition, I've added the Chopiness Index indicator we talked about earlier as an overlay over the chop zone. Since you're limited to the amount of indicators you can apply to your chart, it's always preferable to combine similar ones. The Chopiness Index and chop zone are also commonly used together, so it's a useful feature to have. In the settings, you're able to toggle on and off the Chopiness Index over the chop zone and change the lengths of both indicators. If you want to try the custom chop zone indicator out for yourself, I've made it available for anyone to add to their TradingView chart. Just use the link in the description and click the blue button with the star, and the indicator will appear in your favorites where you can put it on your chart. If you don't have a TradingView account, you can use the link below to sign up for free or to get $15 off a paid plan. The chop zone and choppiness index aren't the only indicators we can use to determine the levels of trend and consolidation. The Aroon indicator and ADX indicator have similar goals, and I've made videos on both of them along with custom versions you can use on your chart. Make sure to check out those videos as well. If you're interested in more advanced indicators, check out the Quantifica Patreon, where you can get access to the entire library of all current and future premium Quantifica indicators. Link in the description. If you found this video useful, a like would be greatly appreciated. If you want to see more videos like this, go ahead and subscribe. Thanks for watching.